Hello and Assalamualaikum everyone. First and foremost, we would like to give a million thanks to our beloved and respected lecturers, Sir Mio and Sir Rustam, for their guidance, advices, and everything throughout these semesters. Today, we would like to present to you about the financial ratio analysis of the Panasonic company. Hope you enjoy the video.
Assalamualaikum, my name is Nur Fatihah binti Mustafa.
Assalamualaikum warahmatullahi wabarakatuh. My name is Anisa Akila binti Zainal Abidin.
Assalamualaikum. My name is Halisha binti Harun.
Panasonic Group was founded in 1965 as Kit Radio and Electrical Co. in Balik Pulau Penang, Malaysia. For this humble origin as a small retailer cum workshop for electrical home appliance, Kit Radio and Electrical Co. grew under the leadership of its founder, Datuk Sri Chew Wenkar, into the present-day conglomerate. The name Panasonic is a tribute to the founder, Datuk Sri Chew beloved home state Penang, while Sonic is an audible reminder of the company roots in selling radios. Panasonic is also synonymous with the praise sound of Penang. Objective that we gain from the study are to determine liquidity or short and long-term solvency. Short-term solvency is the ability of the company to meet its short-term financial obligation, whereas long-term solvency is the ability of the company to pay its long-term liabilities of the business. Second is to assess the operating efficiency of the business. Third is to analyze the profitability of the business and help in comparative analysis.
Okay, let's continue to financial analysis ratio. Financial analysis ratio is an analysis tool used to interpret and evaluate company performance. By this analysis, it will provide some information to the business managers from data contained in the company's financial statements. Ratio analysis can be categorized into liquidity ratio, activity ratio, leverage or solvency ratio, profitability ratio, and market equity ratio.
In liquidity ratio, we have current ratio. The formula is current asset divided with current liability. So for 2018, the current ratio is 1.21 times, and for 2019, the current ratio is 1.18 times. So from the graph, we can analyze that in 2019, the current ratio is lower than in 2018. So the lower ratio in 2019 reflect the Panasonic company has low ability to pay its short-term obligation on time. Next is quick ratio. The formula of quick ratio is current asset minus with inventory divided with current liabilities. So the quick ratio in 2018 is 0.61 times, while 2019 is 0.66 times. From the graph, we can analyze that in 2019, the quick ratio is higher than 2018. It shown that the higher ratio reflects the ability of the Panasonic company to pay its short-term obligation without relying on inventories. The formula of net working capital is current asset minus current liabilities. In 2018, the net working capital is 29,508,051, while in 2019, the net working capital is 24,266,288. From the graph, we can analyze that in 2019, the net working capital of the Panasonic company is lower than in 2018. So, although it in positive value, but it lower than 2018, that means in 2019, the firm liquidity is low. So, overall, the liquidity for Panasonic company in 2019 is worse than 2018. From this liquidity ratio, the company has lower amount of current ratio and net working capital, but the quick ratio for the company is better compared to 2018. This means the company could face problem to pay its short-term obligation on time and also had this amount of liquidity asset.
For the activity ratio, we need to calculate on inventory turnover, average collection period, account receivable turnover, fixed asset turnover, and total assets turnover. The formula for the inventory turnover is cost of goods sold or sales divided with inventory. We decided to calculate on COGS amount. The inventory turnover ratio for Panasonic in 2018 is 3.12 times, while for 2019 is 3.76 times. From the calculation, we can analyze that the inventory turnover ratio is higher in 2019 compared to 2018. It indicates that Panasonic company is more effective in using inventory to generate sales in 2019 than 2018. The next ratio is average collection period. The formula for this ratio is account receivable divided with daily sales. After we calculate, the average collection period for 2018 is 67.67 days, while for the 2019 is 74.47 days. We can analyze that in 2019, the average collection period is higher than 2018, and it can be concluded that the company has problem in collecting debt in 2019 compared to 2018. The third ratio in activity ratio is account receivable turnover. The formula for this ratio is sales divided with account receivable. In 2018, the account receivable turnover is 5.32 times, while for 2019 is 4.83 times. The analysis that we can make is the account receivable turnover in 2019 is lower than 2018. It shows that this company is less effective in collecting receivables in 2019 compared to 2018. The next ratio is fixed assets turnover. The formula for this ratio is sales divided with fixed assets. In 2018, the fixed assets turnover is 2.91 times, while for 2019 is 2.82 times. The analysis that we can make is the fixed assets turnover ratio in 2019 is lower than 2018. It indicates that Panasonic company is less effective in using fixed assets to generate sales in 2019 compared to 2018. The last ratio for this activity ratio is total assets turnover. The formula for this ratio is sales divided with total assets. For 2018, the total assets turnover is 1.15 times, while for 2019 is 1.18 times. We can conclude that the total asset turnover in 2019 is higher compared to 2018. It shows that in 2019, it is more effective in using total assets to generate sales compared to 2018. From all of the calculation above, we can conclude that the efficiency for Panasonic company in 2019 is worse than 2018. From this activity ratio, the company has higher average collection period, lower ratio of account receivable turnover, and fixed asset turnover. However, this company obtained higher inventory turnover and total asset turnover in 2019 compared to 2018. This means the company could face problem in collecting debt by having a long period to collect the debt. They also not effective in collecting receivable and generating sales by using fixed assets.
So here I will continue to the third categories of financial ratios, which is leverage or solvency ratios. There are three types of this ratio, which are debt ratio, debt to equity ratio, and time interest earned. Next, I will share those three ratios calculated based on the financial statements of Panasonic Company. Let's continue to the debt ratio of the Panasonic Company. From this, it can see that the formula to calculate this ratio is debt ratio is equal to total liabilities or total debt divided with total assets. From the table shown, the debt ratio for the year 2018 is equal to 58.43%, while for the year 2019, the debt ratio is equal to 58.09%. Here is the graph for the debt ratio of the Panasonic Company for the year 2018 and 2019. This graph shows that Panasonic Company has a lower amount of debt ratio in 2019 compared to 2018. From this, it can be analyzed that in 2019, the Panasonic Company has a lower amount of debt to finance the asset compared to 2018. Next is the debt to equity ratio. To calculate the debt to equity ratio, the total liabilities or total debt must be divided with equity. So the debt to equity ratio for the year 2018 is equal to 140.58%, while for the year 2019 is equal to 138.61%. Here is the graph for the debt to equity ratio for the Panasonic Company for the years 2018 and 2019. This graph shows that in 2019, the debt to equity ratio has a lower ratio than 2018. From this, it can be analyzed that in 2019, the Panasonic Company has a lower amount of debt compared to 2018. Let's continue to the last types of leverage ratio, which is time interest earned. To calculate the time interest earned, the earning before interest and tax must be divided with interest. And here, it can be seen that the time interest earned for the year 2018 is equal to 1.99 times, while for the year 2019, the time interest earned is recorded for 1.41 times. And the graph given shows that in 2019, the time interest earned is lower than 2018. From this, it can be seen that the Panasonic Company facing a problem to meet the loan requirement and have a high probability on risk of default for 2019 compared to 2018. The leverage or solvency ratios of Panasonic Company had a better performance in 2019 compared to 2018. From this, the company has lower debt ratio and debt to equity. This means the company could better financing the asset and debt in 2019. The company also facing a problem to meet the loan requirement and have high probability on risk of default because they has lower times interest earned in 2019 compared to 2018.
Profitability ratio, it have gross profit margin. The formula of gross profit margin is gross profit divided by revenue. In 2018, gross profit margin is 18.44%, while 2019 is 18.24%. From the graph, we can analyze that in 2019, the gross profit margin is lower than in 2018. So it can be concluded that in 2019, Panasonic Company has low ability to control cost of goods sold relative to its sales revenue. Next is operating profit margin. The formula of operating profit margin is earnings before tax divided revenue. The gross profit margin in 2018 is 2.66%, while in 2019 is 1.9%. So we can analyze that in 2019, the operating profit margin is lower than in 2018. So it indicates the lower productivity provided by the firm in 2019. Is net profit margin, which is earning after tax divided by revenue. So in 2018, the net profit margin is negative 1.06%, while in 2019 is 0.13%. From the graph, we can analyze that in 2019, the net profit margin is higher than 2018. So with the higher ratio, it indicates better income to shareholders.
The next in profitability ratio is return on assets. The formula for return on assets is earning after tax divided with total assets. The return on assets in 2018 is negative 1.21%, while for 2019 is 0.15%. It can be concluded that the return on assets ratio is higher in 2019 compared to 2018, and it shows that the company have higher return on firm investment in 2019. Lastly is return on equity. The formula for this ratio is earning after tax divided with total equity. In 2018, the return on equity is negative 2.91%, while for 2019 is 0.37%. It shows that the ratio is higher in 2019 than 2018. It indicates that in 2019, this company gave higher return to their shareholders compared to 2018. We can conclude that on profitability, the Panasonic company performed quite well based on the net profit margin, return on assets, and return on equity. This could be due to good performance because they are able to get higher return on company's investment and to their shareholders.
Let's continue to the last categories of financial ratio analysis, which is market or equity ratio. This ratio consists of earning per share and price to earning. Let's see the amounts of those ratio calculated based on the Panasonic company data. For the earning per share, the formula is earning per share is equal to earning after tax divided with number of common shares. Suddenly, the Panasonic company has already given the amount of earning per share, and for the year, both years 2018 and 2019, which are amounting negative 2.67 ringgit and 43 cents respectively. And the graph given shows that in 2019, the earning per share is higher than 2018. From this, it can be shows the Panasonic company has a better income per share for 2019 compared to 2018. Next, we continue to the price to earning. To calculate it, the market price per share must be divided with earning per share. After putting the amounts of earning per share and market price per share in the formula given, we will then get the amounts of price to earning of the Panasonic company, which are for the 2018, the amount recorded is negative 0.22 times, while for the years 2019, the price to earning is equal to 1.51 times. And the graph for the price to earning shows that in 2019, the price to earning is higher than 2018. From this, it can be shows that the Panasonic company has stronger growth expectation in 2019 compared to 2018. It can be seen that the market or equity ratios of the Panasonic company had a better performance in 2019 based on the earning per share and price to earnings. This could be because of they have a high income per share and have a stronger growth expectations. As a conclusion, the financial ratio analysis is important in decision-making purpose. Usually, the external stakeholder will use this financial statement to identify the health of the organization and evaluate their financial performance, while the internal constituents use it to monitor and managing the finance. Overall, the Panasonic company has performed well in operation and financial in both years 2018 and 2019. In a business, having fluctuation is a normal thing for business operation, as some factors are uncontrollable, such as economic changes, inflation, natural disasters, and more. However, the company should improve and take precaution steps so that they can able get the profit and sustain for upcoming years.